let's face it, it's really hard to be a profitable trader. And sometimes we are our own worst enemy. So we really have to keep our money losing tendencies in check. And well, I've done a lot of stupid things in my life and in trading. And honestly, I still kind of do all of them sometimes. So here's the top 5 money losing habits on my list. Hi, my name is Devin and you're watching Reward Risk. If you like content like this, please hit like and subscribe below. And it's free today. So don't wait. Number 1, not respecting the stop loss. And stop loss, as I'm sure you know, is a point where you set to take a maximum loss should the price goes against you. Not respecting a stop loss is like hooking up on a one-night stand, and right before you climax you think, wouldn't it be interesting if I took off the condom and keep going? And I don't know, let's see what happens. But inevitably, for one reason or another, whether you've already are having a red day, or perhaps you've taken a huge position and you don't want to take that loss. So we've all done it. We've all taken off the condom. No. I mean, let the price slide against us, pass or stop, and inevitably, we always regret it. Because the price action is telling us that we need to get out of the position, but our wallet is telling us, no, I don't want to lose that money. The important thing to remember is live to trade another day, because hope is not a strategy. It's a death sentence for your trading account. Trust me, I know. I've done this a couple times. Number 2, over trading a choppy market. It's kind of like you let your wife drive and you get preoccupied and then suddenly you realize you don't know why you're here or if she knows where she's going exactly, and you regret letting her drive in the first place. Well, it's not really like that. I just let my wife drive earlier. But during midday action, where there's a lot of choppiness, it's easy to just kind of fall into a trade and then get chopped out. And it can happen over and over again, especially if there's no direction. And what's even worse is that there's slippage. The price difference between the bid and the ask, and just that alone could be 35 or 50 cents depending on what stock you're trading. Number 3, overstaying your welcome. Remember, short-term price movements are just that, short-term. So if the girl's saying, I'm letting you get to second base, but no home run tonight, so be happy with second base. It's better than a sexual assault charge, if you know what I mean. So if there's resistance at a certain price point below your profit target, it's okay to take some profits or take all your profit, because there's no guarantee that the stock will get through the resistance. It could very well just rotate to the downside and you might go home with a loss. Remember, name of the game is live to trade another day. Number 4, taking on a full position immediately. This is usually bad because the price only moves in 3 ways. 1, it can go straight up, which is not likely, but it can happen. Number 2, it can go straight down, in which case you would have to stop out on a full loss. Or number 3, the price can pull back and then curl back up, in which case you would not make any profits from any of the curl that is below your entry point, and there is potentially less profit because your entry point is so high. So the odds are really not in your favor in maximizing your profits, actually taking a full position right away. Number 5 is emotional or revenge trading. This is when we take a loss and we come back and trade the stock just because we don't want to take the loss. Remember, this isn't your ex-girlfriend. You have to respect your money, especially if number 5 is tag teaming with number 2, the choppy market. So that's it for me. If you like how this video is set up, please drop a comment below, as I'm always looking for ways to improve my content and be less cringy and more enjoyable to watch. So hopefully, I'll see you next time.